Are you a startup business owner struggling to get the right type of financing, understanding where to turn to without being overpromised and underdelivered? You're unsure about how to put together a business plan, or do you even need one? Giving up equity, do you need to do that? And in many ways. Hi, this is Michael with Viral Funding Solutions. And in this video, I will be going into the easy approval startup business loans without revenue, without collateral, with it if you needed to, and no down payment equity injection unless you really needed to and you could qualify for, plus ChatGPT AI introduction on perhaps how to put together a business plan and a few other scenarios in your business to help out your current customers and more, and 0% interest for 6 to 18 months and up to $150,000 in the form of business credit cards. So I have a great one for you here today. And before I get into detailing these services, which I will in just a moment, I'm going to be switching over to a different tab and going through some of these startup options. But you need to know about the 4 to 5 steps to getting started. One of those being understand your financial forecast, meaning understand your financial needs. What could be your cash flow projections and assumptions detailed over the next 18 or so plus months, with a few other things that more precisely could be put together in a business plan. And there's certain lenders that don't require you to put a business plan together depending on what type of financing you're going after. It could be either cash flow, credit, collateral, and there's a huge one right now in the market you're not hearing enough of from other videos you're perhaps watching or have come across or not yet, or blog posts and things that people are not sharing with you. And I'm an expert in what I do, I'm very introverted, cerebral, and I know my stuff very well. I'm in the markets day to day with the best lenders and underwriters out there. So it's not just as simple as watching the best enhanced video footage, because that's not what this is. I want to give you the most authentic information and let you know and show you that I've been in this long enough to know that it's not just as simple as just understand this, understand that, go and apply here, and then see what comes about it. So what you must know too is that I run my own businesses. I've done this for myself, so I know the amount of headaches you must be going through, have gone through, and so much more. I run a digital marketing agency, lead generation business, affiliate marketing in the health space, other verticals in affiliate marketing, other ventures. And this is my primary focus as a business funding expert, business loan broker expert, who's actually in the trenches every single day with these lenders, the best out there and the right underwriters. And so you're not tripping up. And there's other videos perhaps you've come across where they're like 7,000 in views, 10,000 in views. This may not get there, it may, but I just want you to know that you're hearing this from an expert and somebody who's been in your shoes. I had to at some point go on unemployment benefits, and it wasn't by my fault, by the company. I couldn't get paid more. And so what ended up happening is I started my business around that time. I was on food stamp cards again. I didn't want to go through that, going through the grocery store, not making eye to eye as an introvert, an older brother myself of 2 of us. So just want you to know that, and I might detail a little bit more towards the end. So there are steps by this, just understanding your financial needs, understanding where to look, and then 3, understanding what type of funding you are taking, because there's installment, there's revolving that can transfer over. Can you do a combination of 2? And how would you do a combination of 2? And what would be the actual qualification? See, not enough people are sharing with you stuff that is not found publicly. It's not publicly released because they're not in the trenches long enough with these providers to understand what these providers are looking for. They just tell you to click a link and then go sign up, and they'll take care of the rest. And they present themselves to be this enormous advocate in this stronghold on it, which I'm not saying it's bad or they're bad people for doing that at all. That's not what I'm saying. But if you're going to get this information, don't you want to get it from somebody who knows their stuff? 1, 2, can show you things that the lenders aren't publicly showing you, and what a lot of these lenders wouldn't want us to publicly release to you, but we can show you it in some cases and in other ways more. So let me go back into this, and I'm going to go switch over to a share screen here now. Give me 1 second. Let me paste my other document tab. And I may leave this down below in the description so you can take a look at it. And if it isn't there, then you can start off with the questionnaire down below. If you're looking for any type of business funding, whether you are a startup or not, the best place to begin with is my questionnaire. So there's step-by-steps to this where I would say understand your financial needs, understand where you are going to then apply, understand what type of funding you are taking, what type of lenders those are. It's not right away just go into an application. It's, hey, how can I get more feedback? How can I understand what my best option and options are specifically to my needs? Have a very personalized and customized email/PDF response from a real business funding, business loan broker expert who's helped out a lot of people gratefully. And I'm very humble. I do speak slow like this because I just have to get through the information here. Let's just try to get over with this in the next 10 or so minutes. Please hang in there with me. So that again will be down below in the description. I very much do care about you as a person first and in your business success. So here we are on this document. And again, I might leave down below. And if it is there, you still want to get through the questionnaire because then I can evolve this into showing you more specifically on your scenario and a custom roadmap for you. That's what I do for people too. I will share with you a custom conclusion and a roadmap on what to do step by step. Where you begin is not where you need to end, or where you begin, that might be the pinnacle at the very top, and that's where you're okay with being, and you don't have to go backwards, or you don't have to add an additional amount. So here is this. Please take the time to fully read this so you understand them. And again, you would want to fill out the questionnaire if you haven't. And there are steps to this. So getting your financial needs to start up your business, whether your understanding of what those services are. Could it be a grant to begin with? Could it be equity crowdfunding? Could it be a cash out refinance, some type of equity, some type of liquidity? Those are big in this market right now, equity and liquidity. And you can chop those up in certain ways and combine them. But if you have any hard assets you can convert into cash, that's very helpful too. A cash out refinance, whether you have property, a commercial real estate, or any investment real estate that you own, or you have a partner, or you know of somebody that can help you and they're going to willingly want to do that, then you can look at injecting equity out of that and then get a certain amount from it. And so that's a great way to start a business, depending on how you're making payments, depending on who you'll be paying back, depending on how much you need. That may be the best resource, because $50,000 to start a business is not a lot. Think about how much you are already paying in payments. Think about the annual debt service already of those existing payments for your business and what you're trying to do. So there's those steps. You've identified what type of business financing will suit you best. Is it a grant? Is it those solutions? And then how do you plan to use it? Of course, in terms of, is it an installment, revolving, what it'll be applied to? That's stuff that you should already know ahead of time, and you can construct the business plan. Certain lenders won't ask of that. At an SBA level, they will, and I will get back to that momentarily. And then just researching and comparing certain types. And I work with a load of lenders, so I want to make this very clear. I work with the best in this industry. And there's direct lenders, there's indirect lenders, and I can send people to direct lenders. And in this market, it might be best to do an indirect where I already have housed those lenders. It's better to do it in a brokerage setup, myself and with my team, and we review things, documentation, and so forth. And so in this market, I may be your best option because we can look at 2 to 3 underneath your industry. There might be more or less. And then we can say this is the best one without affecting your credit, and a soft credit check to begin with. And it can be a soft credit check throughout. It could be a hard pull some part of the process. I'll cover that in a little bit with some of these options. So let me go back into this document. And then this next part, I would say, would then be to submit the questionnaire form that I'll leave down below. It could be started right into the application, but the questionnaire form would be the best place to begin. So I'm going to start off with an SBA 7A option as a startup. This is number one. There could be a few other options, but this is one of my preferred lenders, and I'll reveal more of that in time. And best with the SBA, that can take around 4 to 8 or so plus weeks. For non-startups, you need 2 years of recent profitability. I'm not going to cover the non-startup solutions right now. So let's jump across over to the startups. For startups or franchise startups, less than 12 months preferred. In most cases, a lot of these lenders want, but it can vary per lender case on how they identify as a startup, true startup. But a lot of the times, that's what you will see. Documents and information needed are below, and how I will ask for them. So I want to put this here in red just so you see that difference. And then keep scrolling down until you see the first blue hyperlink. Keep reading this part though, but you'll need an equity injection as a startup. On top of having a business plan, do you have an equity injection of at least 25% to 30%? and it's based on experience. So if you have some kind of management, supervisory, maybe you have a past experience with another business and it's vertical or is it horizontal? How does that apply to this business? How do you keep up with your cash flow? What will happen to the cash flow projections and assumptions and a few other details? That's what we want to know and make sure of that you have. And if not, it's not as concrete. It's going to make it difficult to have the right financial forecast for these lenders and not having the right assumption and projections set up, or you can really determine your cash flow and what it could look like by knowing each client, customer in your business. What will they bring in terms of return on investment, activity return on investment? Who will be on your team? Kind of like venture capitalists will look at and make certain decisions on, and long-term value of your customer. This can show how much profit your business is likely to make and how successful your business is to be too. And there's a bit more to that with projections and assumptions. We can look at P&Ls later on, and you're probably already operating at a loss and a few things like that. So you have to be mindful of what you're doing, having relevant experience, as I said here, operating another business that's similar or not exactly, but in day-to-day operations and managing cash flow helps. The credit requirements are generally high in this space right now. And in this market with SBA loan lenders, you'll see a lot of the time 675 and above, if not 660, sometimes 640 more or less. But it's harder on that to make a exception, especially if you're a startup and you're starting without good credit. Like, how are we going to work with someone like that if they're already having debt obligation problems, or if not, they have less than revolving accounts? Your age history matters a lot, especially when we're getting into some of these creative credit-based financing options we'll get into momentarily. But this will be down below. There will be some questions I'll ask, like, do you have equitable collateral, any kind of liquid cash? If so, what and how much? Do you have liquidity and post-closing liquidity? If so, how much? How much of a down payment can you provide? This goes in part with the equity injection of 25 to 30%. You see a lot of the times when you're trying to do an SBA 7A loan. What relevant experience do you have, if any, or similar? So I've done plenty of these where it does make sense. For others, it wouldn't make sense. So there are just some details there. I won't cover all of this. I want to get through this video in the quickest amount of time, but I can share with you this down below. If it isn't there, or if it is, the best place to begin with is the questionnaire. A business plan, normally businesses under 2 years, under 12 months, you need to put one together, or based on projection value. So we can skip this. It depends if you're not a startup, and a few other things. And I'll have a template for you to use there. And we're going to get around ChatGPT here momentarily and show you a few things you can come up with. So I navigate you in the step-by-step process from step 1 to step 4 in closing, and what would happen and what I would need to collect and how I would need to collect it, how this needs to get submitted, with a lot of fintech companies now accepting digital applications and doing all of this stuff. Is there a hard copy PDF? I can communicate that with you. When would that come in? There are a variety of lenders out there, and you just want to be careful about just going to a SBA.gov. That's not the best way to do it. You want to find the right preferred lender for your specific industry, your circumstances. Maybe you're trying to refinance, consolidate something later down the road or beforehand, and this would be the best approach. So you want to connect with yours truly. I know my stuff in this industry, guys. I've been helping out a lot of people for a while, as I mentioned before. I'm very careful, loyal, respectful, humble, accountable, responsible, and I've been in this long enough now, having funded other ventures and doing other things, that I understand how this all works, why people get declined, why they get rejected. And like I said, equity, liquidity, that's a huge market right now in this year and moving forward. Those of you who prepared the foundations of your personal and business credit the last year and the years prior are in much better shape this year. And I'm seeing a huge difference and a huge drop off with like revenue-based financing and credit-based, because you guys just don't have those aligned. The deposit isn't frequent enough for a non-startup type of business. And if you're trying to start a new venture and a new business, you really have to have your credit and business credit aligned. It makes a major drastic difference. Adding revolving accounts, trade lines, all of this stuff I can help you with. Don't worry about that. That's why it's important that you just don't apply anywhere and everywhere. Be careful if there are these influencers out there. I'm not saying they're bad people, but be very cautious that they're not sharing with you everything. They're just trying to get you into an application so it credits them, and whatever happens, it probably comes back to them. Or if not that, then there's more, if that, more or less. So you have to be careful about how much do they share with you. Are they charging you for things? Are they, just because they have the hugest following doesn't mean they're the best. So be very cautious of that. Step 4, you see that I gave you guys some examples there on what it could look like, but it's not set in stone. How to start, certain documentation that would be required. If it's a startup, it's a bit different on what would be requested. If purchasing an existing business, which I do plenty of that here too, you may want to start by purchasing a business. I'll go to the comments, guys, in a moment. Appreciate you. Thank you. We're going to try to close this up here soon. So if you're trying to start a business versus purchasing a business, there are a lot of pros and cons to that, of course. you would want to know how to financially, how to business operation structure wise, and even on the front end with the product development and all that, understand the business and understand business in general, but understand the business you're getting involved with. If you are just trying to purchase a business, but you don't know how to take it to another level or keep it stable and it goes backwards in cash flow, profitability, EBITDA, and all these other factors, what is going on? You got to bring in a partner, a silent partner, or somebody that can help you partner with, give equity to, or whatever it is you're trying to do. But there are a lot of advantages of getting an already established business with cash flow and going from there, and then financing a business like that to help you. There are many more advantages that are not financing related, but I go into the buyer versus seller docs, and I'm showing you guys everything per T here. And again, questionnaire down below is where you want to get started. Now, here is a great solution for startups. Now we're getting into the creative credit-based financing. So give me a few minutes here to round up this, and then we'll get going with a few others, and then we'll close up here 15 minutes in. This is of value to you. Please let me know in the comments, what is the biggest issue you are dealing with at this moment? That if it weren't financing, what would that be? So here, creative credit-based financing option 1. This is one that I recommend to a lot of business owners. And very quickly, this is one where we can encompass personal plus business funding. How many people out there are just telling you, hey, they're just telling you, find the financing option, select this link and click that link. And then I'm actually going through these things per detail. And a lot of this stuff too isn't even publicly released. And there's even more. And so what I'm showing you here is personal plus business funding. If you have the right credit, meaning good credit, normally they want to start off at 670. But on all 3 consumer credit bureaus, it's just too much of a risk to take a 670 on FICO Experian. I've seen it too many times. And I've seen all of the reasons why people get declined and get a lot less. It's crazy. I'll get into some of that in a moment. But if you don't have 670 on all 3 consumer credit bureaus, it's not the end. You can have 680 plus FICO Experian, but 700 plus is best. And we can evaluate that part with my expertise and my expert lenders and providers in this, where we're getting you maximum funding. Let's say you can walk into a bank, I ask for 10,000, or I ask for a certain amount in a personal loan and see what I can get approved for. You only get 10,000. Over here, I take you to my expert lender and my team, myself in there included, and we're able to round up, let's say 50 to 75K in a first round of a term/installment loan, personal lines of credit on top of personal credit cards if need be. But here's the cool part, that we can also add business credit cards, those, and even 0% interest business credit cards, where we can liquidate the cash out of these and use them for what you need to use for your startup. And even as a non-startup, it's true no doc. And we work on your behalf to go through those banks, the ones that are best. What are we doing at a lower regional level, community level, if anything, national level? And what does it pertain to in your specific state? And so we're working on saying, hey, we could do a Chase, we could do a US Bank, a Bank of America, a PNC, and a Truist. We can work on some of these. And this is how much we can project to get up to. And then we can go out there. We would be requested to have like an EIN letter, articles of organization, a copy of your driver's license, photo ID, etc., and so forth. And we can work on your behalf and maximize those approvals, so you're not having to go at it alone. And now you're racking up inquiries you shouldn't have racked up. You're unsure about whether you should be applying or not, getting those even soft pulls, but then hard pulls. And it's not good for you just to rack up too many inquiries. You're going to the wrong source. People are overpromising and under-delivering, and the list can go on and on. I'm very introverted, guys, and so you don't have to worry about me pressuring you or doing that whole selling thing. I don't come from that background. I educated myself too. I'm not saying that's not good. It's just I've educated myself. I went to school. I studied sociology. I was a Division I soccer player. Then I moved into chemical engineering because I'm very math and system focused. So I moved into that, studied those classes for some bit, chemistry being my favorite class. And then I moved into business administration because I wanted to start a business eventually. Worked in construction manufacturing. And I actually worked in the fields, the machine, did a few things, and then went into financial logistics, did a few things there too. Working hard up here, moving things physically for a huge contracting company, servicing HP and P-Cell. Company went down under, had to go back on unemployment benefits. Not a good time. Younger 20s was not my doing. I could have done something different, yes, but for more stability at the time. And that's when actually it was my best, because that's when I started building business and doing other things with businesses. And so a lot of good came out of that. Let me move back into this. So if you wanted to do creative credit-based financing, will they ask for a business plan? Not really. The majority of the time they won't. They just look at your credit. They're going to want to see you have 670 on all 3 consumer credit bureaus to at least do what we call fast track funding, where we may be able to get you a term/installment loan. And it's not revolving, it's not these personal or business credit cards, but until you have 700 plus and above right now in this market on all three consumer credit bureaus, then we can look at doing multiple business credit cards at 0% interest and liquidate. Keywords I said earlier: liquidate and equity. Huge market. If you have these business credit cards, you can get the cash out of, huge, especially if you're using them for real estate purchases and more down payments. You're paying off other debt however you best see fit. When you do that, you're trying to use it for business reasons like payroll, other expenses. You have marketing, you have growth, income, revenue generating streams. You want to increase more of that, get more inventory, equipment. You can use it for everything. It's really not restricted. It's more or less like you get a business line of credit, a true business line of credit, which are hard to get for startups, by the way. That's not going to be an option normally. So here I just kind of go through a quick view of the service. I won't go through all of these details, but it's all there included for the personal term/installment and combination of unsecured business financing. You don't have to offer up any kind of collateral. And now the revenue part of this, here's what I want to make mention of. So the revenue part of starting this is they're going to require you to have at least 35,000, if not 50,000 in annual gross adjusted gross income. That's standard anywhere. Like if this service is asking you for a certain amount, how will they verify? Good question. And so they're going to ask for pay stubs if you're still an employee, or however they see that, what they have to collect, for tax returns if you're self-employed, and it could be a combination of it where you can prove. But a lot of the times they're going to want to verify by at least 2 to 3 years of personal tax return. 2 years at a maximum a lot of the times is what's mandatory you're going to see, if not by pay stubs or a different way that you can verify that if you're still an employee. So we need to be able to verify that and be able to verify it is you, and be able to see if this is efficient enough. And I know how to analyze that stuff. P&Ls, cash flow analysis, profitability, all that stuff, increasing, decreasing, looking how to trim expenses, looking how to grow revenue, cost of goods sold, all that stuff. Looking at the marketing and advertising, because I do this a lot of this for my own businesses. And so this will be all detailed, and it's going to be in this document, but I would start off with the questionnaire form down below if this isn't there. If it is there, okay, but it's best to get started with that questionnaire. And here's the fast track funding that I spoke about earlier and what we need to see. I'm not going to go through all the details there, but just know it is all there. I can only cover so much in the time we have here, and I've already made other content on this kind of stuff. And if you've already received the questionnaire and all that and moved along, or you haven't yet, then you'll see that. You'll be able to know it's all in there, and I'll be able to communicate it with you. So here, if you don't qualify, let's say you don't have the credit, you don't have what you need to get started with, and you got to work on credit repair, and you got to go through all those little parts. Yeah, we can do that in the meantime, which I have a lot of people doing. If you need credit repair, guys, I'll leave information in the description, or as much as I can. And what I'll also do and say is business credit. That's what you need, business credit. We're going close to 30 minutes. I'm going to try to wrap up just underneath 30 minutes, and I'll try to get to the comments. I don't like speaking too fast or fast at all, but to get through the material, I think that's helpful. This document, I'm going to try to leave it in the description. I won't put it in the comments now. And if it isn't there, don't worry. What I would do is start off with the questionnaire. Let me actually put this in the comments and which one I'm talking about. I actually also have a real estate one. Just posted in the comments is the business funding questionnaire form. If you filled this out already, I'll get back to you. And if I already did, you should know that or look for that email. I'm very conscious and aware of making sure you receive it, because this is something you're going to be able to reuse for many years ahead. You're going to look at it and go, whoa, I couldn't qualify for this in a year or two, but I know I can come back and reuse this PDF/email. Heck yeah. Whether I can or can't qualify for it, and he's showing me things I can't find just publicly, or not everybody's willing enough to share, and it's not accurate and all this stuff, that's something you should be paying money for, but I'm giving it to you for free. That's literally worth a lot of money, and a lot of what these lenders don't want to share with you. I also have an A to Z Funding Mastery Academy course, so if you guys want to learn about that, and that course is constantly evolving, and I'm bringing in more information and help and doing a lot more with that. And check that out. So I'll leave it down below too, but the questionnaire form would be the way to begin. And let's continue. So if you didn't qualify, and I'll give you the scenarios on why you wouldn't qualify, you could use a credit partner. Over 40% of our clients end up using a credit partner. That number is staggering now in this market. I wouldn't be surprised if it's closer to like 80 to 90%, because I could tell you right now, and I made a post on Facebook the other day about why it's a very hard market right now, because people are too overutilized on their credits. and their credit cards, or one or multiple, and overutilization, too many missed late payments, and there's a lot of stuff that was out of your control, or just weren't prepared enough, or you just took off more than what you can chew. And there's a lot more reasons that I don't want to get into on the credit side that can be a problem, but you kind of know where I'm going with this. And I see it all, guys. Like, who else to see it from directly than yours truly, like, that can give you that feedback. I'm not just sending you somewhere to never communicate this with you or get the right information because I don't have the right personal and business connections with. I have those with like the best lenders out there. And so they're giving this information out to me that they wouldn't otherwise give out to everybody else, or other brokers or agents, or the quote unquote glorified referral partners who just create videos and just send you to those, where I'm actually reviewing a lot of the stuff that comes through documents in a lot of cases. And so here, if you don't, then you can use a credit partner. And this meaning that they can guarantee the credit, the unsecured personal funding. And what ends up happening is, if they have stronger credit, hey, Jimmy, hey, Sally, and you can detail to them, maybe even show them a business plan and go, hey, here's a business plan that I even put together, and here's my projections and assumptions. And if I just started this, I'd be in better position without giving up equity. Can we do this as a credit partner, as a startup, or as a non-startup? I do a lot of this. And they go, yeah, I have somebody, a spouse, a friend, a family member that doesn't own a business. Maybe they don't own a business. That's okay. But we are going to limit it only to like personal funding, term/installments, those personal lines of credit, personal credit cards. Now, if your credit partner does have an LLC, a corp, or however they are incorporated with the state and the EIN, and proving this when we go through the process, then they could potentially do 0% interest business credit cards to help you out. Later on, we could talk about authorized user accounts, transferring over the debt over to you. And there's a few other scenarios, so we can get very unique with a lot of this. It's very cool stuff, guys. There's the business rollover account, and I want to separate this. I just moved a few things earlier before I did this live. And so rollover, if you have an IRA and or 401k account or accounts, you may qualify for a business rollover for working capital. You can use retirement assets that you may have plenty of or limited to, but it's helpful. And it could be a surplus to something else with no debt, no penalties, and no taxable deduction, or this, I always like to use the word deduction. That's common. Distribution to grow your business and your retirement at the same time. So that's great with taxable distribution. That's going to help you grow your business, and it's going to do it where you're going to alleviate more stress from your mind mentally. It's going to help you. Credit restoration and high debt elimination. I'm doing plenty of this right now with multiple clients. If your credit rating is holding you back from funding, credit restoration might be your answer. This not only includes inquiry and late payment removal, but correcting other errors and issues. And if maxed out balances are part of the problem, there are debt elimination solutions available. So a very cool thing, especially for those of you who are startups, or non-startups, and you have too much debt. It's just a difference of too much high utilization. I need to lower my payments, and we'll tell you that. But before going into all of this and we do a soft pull and look at things, why not already know that ahead of time? That's why I also have my free 6-step pre-approval lending checklist to kind of show you this more or less. And I'm always updating that I created, yours truly, without ChatGPT, by the way. And so what you must know is why there are a lot of declines. So let me get into this. We're 28 minutes in. I don't even think I can cover this underneath 30 minutes. If you guys are getting value, please give me thumbs up. This is unlike anything else you guys are going to find online. I can almost guarantee you that, if not fully guarantee you that this is not being shown like this up front, if not shown on the back end, or those who do or don't know their stuff are not giving enough information to you. They're bait and switching you. They're trying to scam you, or if they're not trying to scam you, they're just not in the market enough to know how this actually works and what are things that are constantly evolving and changing. And so there's a little bit more on the business funding side on what you need to have in terms of credit. And that's all there so you can know about it. You can refer back to this. And program filters for personal funding, as well as on the business funding, and things that may change. You'll be made well aware of it. Things that are up to date, like your personal credit bureaus or the credit scores for business funding, unsecured 0% interest business credit cards, what we look at with medical, auto loans, mortgages, what we're looking at in missed late payments, and why, if you have it over a year, why this wouldn't work, or 2 years. If your scores are less than this, what can we do? And some reasons for declines right here. I'm showing it you in the flesh. And this is not just limited to, there's more as well, but insufficient revolving credit history, only one open low limit and new account. It could be more than one open low and limit new account, depending on the client too. Too much recent activity can mean a lot of things. You're just searching too much. It's not good enough. You have too much evolving. Maybe you just took out a few other things. It's not enough. We can't do this. You're overutilizing your DTI. Too much recent activity, as I said, closed account with the balance, that's bad. There's a lot of other things like missed late payments. If applicable factors I can mention to you, then you will have to pay off the closed account or accounts with the balance we apply next year from the month you applied for this credit-based program. Once inquiry/new accounts have then aged, and we can add more trade lines, revolving accounts if necessary. How many trade lines do you already have existing that are not revolving? Installment, what do you have in auto loans, mortgages, etc.? The list goes on. Age of history really does matter and factors into those approvals. You'll have to seek a credit partner to help. I can share with you this. Other things too. It could be the low limit accounts, no major revolving credit card accounts, too many new accounts opened in the last 12 to 24 months. Those hurt you more than they help you. Too much recent activity, open collection, charges of accounts, bankruptcies, foreclosures. I can go on and on. Previous lates, too recent. You have to wait or get a credit partner. And then no immediate solution for certain people. It's like we can't do anything yet. You got to leverage a credit partner at this point. There's no immediate fix over the next 6 to 12 months, next month, 3-6 months. There's more scenarios there too. And so forth. And let me go on to the next part. And then I might show you a second option. I might say, hey, this other lender, it's 680 and above, or if this is where you need to begin with, this is where we need to start. And here's the reason why. And that's what they're looking for. They're going to value those 5 trade lines more than maybe another one that's factored into the 670 credit. So it depends on what you have and what you don't have and how much time it would take to get there. So it's not just about simply applying anywhere and everywhere that these people are not sharing with you. That's the hard part about what this takes. And see, a lot of you are just not opened up to that and just are like, oh, I'm just going to go apply. This guy told me I couldn't get approved, so I'm just going to go find out what I could get approved. You know how stubborn that sounds, how arrogant that sounds, how much ignorance that brings, and it doesn't help you in your character, and it doesn't align with your attitude and your effort. So what you need to do instead of masking the symptoms is actually fix the cause, fix the diagnosis, go to the root of the tree of what's been planted underneath the soil. Check those roots and see why that tree is so large and tall and so solid and so graceful and so into the position that it is. And then now, as opposed to this other one, because you're just making assumptions, you're making a thought that isn't usually right. It's usually brought from past programming or from what you've heard from others. And so as much as this is funding, it's also understanding this and making sure you're keeping this as energy and time efficient. And so back to this, and we're going to close up here soon. There are more details to this service and what this lender does with maximum funding, have less than 35% utilization. And this also can factor into the other part that we were talking about with the other service. And then here, what we would need in terms of documentation, pre, post approval, etc., how to get started, link there. Option 3, I'll tell you, no, that's not best. That's why it's optioned as number 3. And I'll tell you, you may qualify or you may not qualify. Even if you did, don't start applying just to all of them. Apply only to one. Stop having too many inquiries, even if it's just soft pull. I'm going to navigate you in terms of what is best and what you should be doing. The credit line hybrid, 0% interest business credit cards factored into option 1 and creative credit-based financing we just went through, and so forth. SBA microloans, a great option if you're trying to go through the SBA. This is a different program than the SBA 7A for new and barely established businesses. Also considered a startup if you have years in business with no revenue, starting back up again. You can get up to $50,000 with an asterisk there with a disclaimer that not everybody's going to get that $50,000 max approval. Maybe it's somewhere between $20,000 to $35,000 from the SBA through micro lending programs. The rates, they're a bit different now. I said here 6 to 9%. They could be moved up because of prime and a few other things, and are not 30-year terms, but rather shorter. They do take longer and can get it in cases. Sometimes I've seen out there 3+ months. There's still some people here that I spoke to months ago that haven't received it, and it just takes time. It's like you're competing with grants, and that's another option. For grants, I have that community advantage program, but that's going to require like business liquid credit to some points, and so it's going to be also harder to get approved for in these extreme measures for that. Angel investors, venture capitals, equity crowdfunding, option 1. There's multiple equity crowdfunding, other ones, normal equity crowdfunding that you don't have to give up equity or do other parts of it. Venture capitalists for whatever the field is, private equity, hedge funds. I can go on and on. I haven't even touched on all of them, but I'm giving you guys an idea of what is out there in pitch decks, other VC and angel investing options, ROI on all of this, margin accounts, financial guarantee bonds, stocks. Like there's a lot of this, fixing, increasing your FICO, as I mentioned there, adding primary trade lines to your account, credit repair. Boom. If you need to get that in there. This is most cost effective and very beneficial with the type of disputing process that can help you with this. Very helpful. Bonus, building business credit. That's what should be aligned. If none of you have picked this up yet, that's where you need to begin. Start building your trade credit. As a startup, if you're getting funding and you're not getting these credit cards installment, you're not getting revolving, you better be getting trade credit. And at the very minimal, start building accounts, trade lines that are reporting accurately as well, making the right types of payment, the amount of payments per month, per week, per day, etc., so that it reflects later on. Then you have this FICO SPSS business liquid credit on top of more business credit, not just a Paydex score, or I just started it Dun & Bradstreet, I just started an Experian Equifax, and I just let it sit there. And just because it's out there for 2 to 3 years, does that mean you're establishing and building business credit? Not exactly. And so you really need to understand trade lines and how to get into all that if you haven't. And that's going to help you with those SBA 7A loans as a non-startup at that point when you're cash flowing. You have everything that's in the direction it needs to be in, and you're going to be thankful. And I'm guiding each and every one of you. I'm showing each and every one of you a separate roadmap in that questionnaire. And I'll get back to you if I haven't, for those of you. And if I have, you haven't done a squat about it. Whose fault is that? And I don't say that to sound aggressive or negative. I'm not like that. That's just some tough love. So here, the bonus building business credit video series, business credit cards, good, fair credit, bad credit. You might have to make a deposit, but you're not going to have an optimized credit profile. So it's going to be much harder for you to get what you want. Exactly. SBA microloans, as I mentioned earlier, you have, this is a little bit about what I've already mentioned. Let me move over this. I was moving things around earlier. Margin account, financial guarantee bond, home equity line of credit, home equity loan. I don't want to get too much into that. That can be a touchy subject, one, but then two, it could be spending a lot of time going over rates and everything there. But that might be just a last resort. I don't want to pull equity out of my home if I don't have to. If I have commercial real estate or any real estate investments that I own, like I'm going to be able to do that. And that's what I'm using for as a real estate investor or for as a conjunction with my business, and I can pull equity out of, like I'm going to go to those first. And so it just depends on your situation and what you are trying to do as well from a home versus other type of real estate out there, personal versus non-personal LLCs out there. There's so much we can mix up into this. And then 401k, IRA financing, stocks, and a few scenarios there. Real estate, if you're looking for any kind of real estate financing, I do that as well. Startups, non-startups, real estate investing, I do it all. And I worked on one area for a long time, and then I expanded. I grew my clientele base. I'm very grateful and thankful. There's reasons why people turn to me a lot, and this is because of why me. It's not why so much as in my business or what or how I do it, but why. I'm very loyal, very experienced, reliable, trustworthy, and I bring a lot of confidence and help to people because I've been in your shoes. And I don't want you to continue going down the path of just trying to figure it out on your own, one, but then you just get led down the wrong path. And then you come around. A lot of people, I wouldn't be able to tell you how many times people come around back and they go, I'm sorry, or I'm willing to help you and work with you, but it looks like you have now opened up. And others who are just disloyal, and I go, just leave them alone. And I can help them, and I will help from time to time because I give people the benefit of the doubt. But a lot of the times I'm like, that was disloyalty. And that person's not to be trusted. So it's not me who you have to worry about. It's yourself. I have to worry about the other person. I'm not going to stick around and be worrying, like in terms of like they're causing so much problems that I shouldn't be taking on. It's not problems that are like not outside of effort or attitude. It's not characteristic. It's an infusion of that's bringing on to me where I'm not solving like bigger problems, and it's questioning, what do you need to use the funds for? Why are you having these problems? Is it a business operation problem, financial problem? What is it that okay, that's the real problem. That's what all this stems from. So you could circulate more money in your business had you cut that off. Now it's a little too late. And so what we need to do is give you a quick injection of money from here, recirculate that money you're using to make more money, and then boom, 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 cut some of those expenses off. I know it's easier said than done, but it really can happen like that. And so back to this, and we're going to close up here. And I formed this too, so I can help you guys and not feel like you're suffocating in the stress of what's going to work, what isn't. There's too many options. People don't share it with you enough. They just send you to an application. You're like, I don't know what I wanted. And now you're like, who am I talking to? Like, I thought I would be talking to this person, yet I'm not. And they never communicated with me. Like, what the heck is all that? And so here, cash out refinance, a huge one for a lot of people in the startup phase right now. I'm seeing equity like off the roof and in many different ways. And so cash out refinance, and I go into the details there. If you want to know everything and anything about it, it's all right there. And so I can share this with you in the questionnaire form too, so you have no doubt. You're like, heck yeah, the cash out refinance is the way to go. The credit, I don't have the credit. This can alleviate that by having less credit and still go for it. Well, heck yeah, let's go ahead and do that one then. And it's going to help you. You can get bigger approvals depending on the value and more, of course. And the return on investment, how you use this money, is it going to be beneficial to you or not? Bad debt or good debt? Use good debt. Sometimes you have to take bad debt to get to good debt. But like I said earlier, commercial real estate or any investment real estate that you own, and I'm seeing rates between 9 to 13%, max up to 80% LTV for land purchase or refinance right now, max 50% LTV. There's also a sell leaseback. And I break down scenarios on other things like prepay. I break down appraisal fees, perhaps, underwriting fees, environmental fees. What would happen if you would get declined in a few situations like that? The sell leaseback, the steps right there, sell leaseback, giving up the title to the lender to be able to get some back and use how you need to use it. The real estate form, equipment financing. If you're a startup, then that might be an option. If you have the credits, if you don't, we might be able to subprime or so credit, but it's going to be hard. Like down payment, you're already going to be operating at a loss significantly. And another thing too, your company will likely bankrupt. So we want to be very honest with you. Others wouldn't bankrupt at that. But if you don't have the right plan and how to use this money, there's a reason why you keep taking too much more than what you can chew, and you can't have that money. There's a lot of things you got to look at and leverage. And before you even go and seek funding, like the structure of your business, everything, the market conditions, this is why a business plan is very crucial, even if you don't have to submit that, understanding that you have something, plan A, plan B, for parts of those business plans. If they were to work, if they were not to work, this is what I'm preparing on. And so here I might show you multiple options, but with the first one being best, one for trucking, not best, but this one is, I'll show you a few scenarios. You can't qualify for that for our A-tier lender, boom, 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 boom. This is what they're looking for. And there could be more startup funding options. That's where I'm going to end it. There could be more startup funding options, of course, friends and family, your uncle, a coworker. There's so many ways you can derive of each and every one of these that I've already shared with you. And there's more of them out there, of course. But these are the big ones right now that I'm seeing a lot of. And there are subdivisions of each one. And if there's something that does iterate, I'll be able to share it with you, or something new opens up. But stop looking for a shortcut. Stop looking for the new fancy shiny object, and you're getting shiny object in syndrome, excuse me. You're getting mass overload up here that you just need to take a break and relax and decompress. And it's just not to your best benefit. And so these are a lot of the startup funding options. Now, let me move over here to something like ChatGPT. So ChatGPT is a great source, and you can use this to devise a business plan. Now, you can get as specific as you want. And so this is just one of many AIs that you can use, with ChatGPT being one of them. And there's many different iterations and things that have been created around this, and different features and things that you can do with. And then there's Bard, and there's a whole lot of stuff that's changing right now. It's crazy. You can use this for many other things, but create. I even say please create, or you can just say create for me a business plan in general. See, I'm just going to say it as that is. It's going to give you a very general answer, but it's going to give you a framework to work with. And that's a great way to go about it and what you can do. See how that gives you everything here: financial projections, funding requested, if applicable, implementation plan, appendix. Remember, this is a basic outline, and you should tailor it to your specific idea, business idea, and industry. It's essential to conduct further research and analysis to create a robust and detailed business plan. I can't tell you how many times people do not even take the time to do this. Like, it's so huge. Just the market analysis part alone is what a lot of people don't understand. Like, you're getting into a business, you should understand and conduct thorough market research. I've done this for my multiple ones to understand the demographics, the psychographics, really understand your industry. Are you getting into something you should be getting into at the right time? If it's not, what do you need to do to scale back a little bit? Market, your target market. What are you going after? Your niche specifically. What kind of products would you put in front of your niche and services, and much more? Do you know your competitors? That's the huge part of this. Define your target audience, their needs and their preferences. Analyze your competition and identify strategies to position your business effectively, but yourself more so. You want to position you as in you as a person, period. Your health, your relationships before anything. If those things don't even align, you're already just trying to start a business. And I've been in these other like forums and helping people out too, where it's like, should I start a roofing business? Should I start a plumbing business? Should I start a manufacturing business? If your question is, should I start a business like that? You shouldn't. And it may just be like, your stuff, but you just want to get more information, and that's okay. And you're getting feedback. But if you have no like blueprint for this, or do you have any kind of idea of the market conditions at the very least, competitors in your space, in your city, your state, nationwide? Like, do you understand raw material? Do you understand what you're going to need? Cost of goods sold? Do you understand all this? Like, why it's so hard to run that kind of business, and why most people fail, why they don't get the right clientele and get paid correct? Like, if these are things you don't understand, it's about time. And so those are a few things. There are other ways that I could have put this together and give you an extension of a business plan like this. There's more of it, of course, and for specific things you're trying to do. So create for me, let's see, a business plan on starting a roofing company. Let's keep it congruent with that. And so it's going to be generating the results down here. It is similar to what we just mentioned in our framework, but this one's going to go into it even more. Executive summary: provide an overview of your roofing company, its mission, and the problem it solves. It's just giving you more specific, and there's more concrete details to a lot of this. Let me move screens over for one like this on the business plan. And you can put it in like a table of contents and say things like here. I don't know why it's doing this. My mouse on I think I have to configure my mouse a little bit, because now it's doing this thing where it has to have me click something like 3 to 4 times before it brings something up. I don't know. It's been doing that recently. I don't know if I'm swiping something on my mouse. It hasn't happened really before until recently. So I have to use the touchscreen on my laptop. That's what I have right now. And so and I'll configure that. But here, as I'm looking on one of my other tabs that I'm just going to quickly go through. Like, if you have a table of contents, you can really get into about your industry, current market, and potential competitors. You can put it in listed in bulleted points and by chapters. Your industry financial growth charts, some graphs if you have them. There's different names and things we can put out there in the market, and I've seen a lot of this. Your vision, current list of body of work that you've done. It's very helpful. It's like a resume. If a lender's going to be looking at this that needs a business plan, they're going to look at that and go, or an investor, whatever you're trying to do, well, what does that resume look like? And so they're going to want to see what kind of activity have you done, what kind of management experience, all this other stuff, your mission, maybe adding a secondary funding strategy and an exit strategy, because that's most important. Like, if you are planning to grow this business, to what point? And if you were to exit the business, or if you were to bring in another partner to help you grow that business even more, and then eventually exit it out and transfer that over to them, if so, or somebody else, you have to play this as you would sell the business, even if you weren't. Like, how can you get it to the highest pinnacle that you could? And so back to here, I think I covered everything. Let me make sure. Yeah. And then the questionnaire, I won't run through. We're way over time now, but I'll have down below in the description. I'll get you a very personalized and customized email response on your best funding option and options, thoroughly broken down. And I'll show you, and I've sent a lot of people this already. Excuse me, not sure why my nose is itching. But I'll be able to share with you a lot of what you just saw here, but even more. And this could be a page, a PDF, or an email, very long, but I'll navigate you on where to look. And got it, Vivian. Your credit score is about 650. Can you qualify for this loan? If it's credit-based, subprime credit, harder to. You're not going to get those 0% interest, usually, cards. You'll likely have to do lower limit cards. And if you don't have an optimized credit profile as it already is with age history and a few other things, it's just going to reduce the amount of approvals. And it's going to be a lot harder to. So at that point, is it SBA specific? We probably wouldn't do that too. We wouldn't fancy that. And there's another question of equity that you can add in. And so there's quite a few more things. If you have a credit partner or 401k, cash out refi, and a few of these other loan scenarios, then we could work at that. And I do this constantly, guys, every single day. And so it just depends on your use of funds, how you decide to use them. I want a little bit here for personal term loan, and then I need a little bit here for business credit cards. It makes sense to me. But the two things you guys need to walk away from this video with is get prepared with your personal and business credit. Those who have the foundation, who have it built it last year and the years prior, who were working on it, got really a handle on it, this year will be succeeding. And the ones who have the equity, the liquidity, hard assets, any kind of collateral, whether that's pertaining to a business generating a certain amount of income per year, or you have a sell leaseback or a few other of these situations, and you could do a cash out refinance, maybe a home equity line of credit, home equity loan at the very last, if so. And there's a few other things we can try to do. You can get a credit partner. You can get somebody else who has property to help you, a friend or a family member, somebody in a congruent or non-vertical, more horizontal field, but is willing to help you. Or they're not even in business, but they just have all these properties and all this stuff they're trying to do with and get on with, and they're trying to help you. I have a lot of people every day who do that, and there are more options, of course, but I've listed just about everything. I just want to make sure I didn't miss anything for startups and those types of solutions. Credit-based cash flow will be hard because of revenue not being generated. The majority of the lenders won't look at that. Certain collateral asset-backed won't look at it because of annual revenue requirements, but others would for certain other things. You have a lot of these other ones that I mentioned. Business credit, of course, you want to start that. If you haven't, and continue to build that. So that'll conclude everything. I'm not sure why those two eyes up there, Caroline, but I saw the two eyes like rolling your eyes. I think is that what it means? I think so. When somebody has like the emojis of the eyes pointing up, like I'm not sure why you did that, whether it's good or bad, but I just want you guys to know that I have your best interest at heart. I really do care. I slow down when I speak. Watch these other videos out there on startup business loans and ask me and tell me if it's anything close to this. A lot of the times it's up there, but it may not be. And a lot of this other stuff is like they're just trying to throw out information to continue to help the algorithm and do things like that. But I'm actually here 51 minutes in where I could have done this in less than 10 minutes. No, not really, because I wouldn't have been able to show you bits and pieces of the startup funding solutions and what they would require. There's more to it, of course, but all of that is there. You can leverage something like ChatGPT to help you out. 0% interest business credit cards, if you could qualify for them. If not, you work to it. And I'll show you what you have to do. If it's not now, it's in the future. Purchasing a business versus starting a complete business from scratch and bottom up. Other solutions out there that are startup friendly as well. But a lot of this is what you're seeing is very much what a lot of people are taking on. And credit-wise or not, there are certain solutions for equity-wise. You might have to venture down that route. Private capital or venture capital, I should say. There's other ways of saying private capital, of course. Hedge funds. I can go on and on. I could be on here for days speaking about each and every one of those and those components, having a business plan. But you can also try to do a combination of them. So that is everything from me. Description down below for more information. Appreciate you guys for your energy and time. And if you haven't subscribed, or if you like this video, let's just say that, please give it a thumbs up, share it with others so you feel will find value from it. It can be a complete stranger, a friend, or a family member, but at the end of the day, they have the help that they need. They can go to bed at night very easily without consciously and subconsciously feeling stressed about things and things lingering on their mind, that when they wake up, you guys know that, you feel all and think you look all groggy, you think you grew out like a huge beard, or not ladies, but you just feel so tired and stressed out and like, God, now I got to go on my day. And your routine and habits are already all over the place, or it's just dysfunctional. And we've been there. I've been there a long, long time ago. And I don't have to wake up like that every day anymore because of how things are situated and how I have had to work for them. So do that. And if you haven't subscribed, please go ahead and do so. Click that bell notification icon so you do not miss any future content that I'll be coming out with, and from a real expert who cares, who's actually very introverted, who listens more than he speaks, who doesn't have to have all this fancy material just because it doesn't look fancy now, maybe later on. But I want to show you how authentic this really is, who comes from a different background, Hispanic, Salvadorian, Mexican American, but I grew up in Orange County, California. I'm living in Washington now. So all that information is down below to get started, and I will speak to you on the next one. Thank you and take care.